Imagine a world where every dollar you invest not only grows your wealth, but also contributes to solving the world's most pressing challenges. What if I told you that it's possible to align your financial goals with the well-being of our planet and society? The good news is that this isn't just a dream, it's happening now through sustainable finance. Welcome, everyone. If you're interested in securing your financial future while making a positive impact on the world, you're in the right place. Today, we're diving deep into the concept of sustainable finance, and trust me, this is a topic that will shape the future of finance. If you're new to the channel, don't forget to hit that subscribe button. We're aiming for 1,000 subscribers, and your support can help make that happen. Let's build a community of informed investors who care not only about their money, but also the future of our planet. What is sustainable finance? Sustainable finance is all about making financial decisions that take into account not only profit, but also the social and environmental impacts of those investments. Simply put, it's about aligning your investments with your values. When we talk about sustainable finance, we focus on supporting businesses and projects that are environmentally friendly, socially responsible, and governed in a transparent and ethical way. Think about the traditional financial system. It's often focused solely on financial returns, with little regard for the broader consequences of those returns. But in sustainable finance, the focus is on long-term value that benefits society, the environment, and future generations, while still providing competitive financial returns. The rise of ESG investing, environmental, social, and governance. One of the key pillars of sustainable finance is ESG investing, which stands for environmental, social, and governance factors. ESG investing allows you to invest in companies and projects that meet certain criteria in terms of their impact on the environment, society, and the quality of their governance practices. Let's break it down. The environmental factor looks at how companies manage their natural resources and environmental footprint. Are they reducing their carbon emissions? Are they using renewable energy? Are they engaging in sustainable practices in their operations? The social factor looks at how companies treat their employees, customers, and communities. Are they promoting diversity and inclusion? Are they respecting human rights and labor standards? Are they giving back to the communities they operate in? Finally, the governance factor evaluates a company's management structure. Do they have strong, transparent leadership? Are they following ethical business practices? Are their financial statements reliable, and are they accountable to their stakeholders? ESG investing has grown tremendously in recent years. In fact, a recent study showed that companies with strong ESG practices often outperform their peers in terms of financial performance. This shows that businesses that care about sustainability tend to make better long-term investments. Why is sustainable finance important? Now, why is sustainable finance so crucial? Let's talk about the bigger picture. The financial industry plays a huge role in driving economic growth, but it also has a significant impact on the environment and society. We're living in an era of climate change, social inequality, and growing concern over corporate accountability. If we continue with the same traditional investment strategies that prioritize profit over purpose, we risk further damage to our planet and society. However, sustainable finance offers a powerful solution. By shifting investments towards companies and projects that prioritize sustainability, we can create a positive feedback loop where financial returns go hand in hand with improving the environment, reducing inequality, and building more resilient communities. Moreover, the younger generation, including millennials and Gen Z, is demanding more responsible financial products. They want to invest in companies that align with their values. According to a 2023 survey, nearly 80% of millennials prefer to work for a company that is committed to sustainability. So, the demand for sustainable financial products is not just a trend, it's a movement. Sustainable investment opportunities, green bonds, impact investing, and more. Now that we understand the concept of sustainable finance, let's talk about the different investment opportunities available to you. One popular investment option in the sustainable finance space is green bonds. Green bonds are debt securities issued by governments or corporations to fund projects that have positive environmental benefits, such as renewable energy or energy efficiency. Green bonds offer investors an opportunity to earn a return while contributing to projects that combat climate change. And it's not just about the environment. There are also social impact bonds that fund projects aimed at improving social outcomes, such as affordable housing, healthcare, and education. Another growing area is impact investing, which involves investing in businesses and projects that aim to solve social or environmental problems while providing financial returns. Impact investments can be made in areas like clean energy, healthcare, and education, and they're designed to create measurable, positive outcomes. One example of impact investing is funding companies that are developing technologies to reduce plastic waste or companies that are innovating in clean energy solutions. As an investor, you're not only generating returns, but you're also supporting solutions to some of the world's most pressing issues. How can you integrate sustainable finance into your personal investment strategy? Now, you might be wondering, how can you incorporate sustainable finance into your own personal investment strategy? The good news is that it's easier than ever. There are a number of ways you can start making more responsible investment decisions today. First, you can look into sustainable mutual funds and exchange-traded funds, ETFs. These funds pool money from multiple investors to invest in a diverse portfolio of sustainable companies. Many of these funds focus on ESG factors and prioritize companies that are committed to social and environmental responsibility. Next, consider sustainable stocks. You can research companies that have strong ESG scores and invest in them directly. A good way to start is by looking at companies that are actively making strides in environmental sustainability, like Tesla, which is at the forefront of clean energy and electric vehicles. You can also look into green real estate investments, properties that are built with sustainable materials, energy-efficient designs, and a minimal environmental footprint. These investments not only contribute to a more sustainable world, but can also yield high returns as demand for eco-friendly real estate continues to rise. The challenges of sustainable finance. While the benefits of sustainable finance are clear, there are also challenges. One of the biggest challenges is the lack of transparency. Many companies claim to be sustainable or green, but there's often little evidence to back up these claims. This is known as greenwashing, when companies exaggerate or mislead consumers about their environmental practices. To address this challenge, several regulatory bodies are working to improve transparency and set standards for sustainable finance. For example, the Global Reporting Initiative, GRI, and the Sustainable Accounting Standards Board, SASB, provide guidelines for companies to report on their sustainability practices. These standards help ensure that investors have reliable information to make informed decisions. Another challenge is that sustainable investments sometimes come with higher costs or lower short-term returns. Sustainable projects, especially in renewable energy or clean technology, can require significant upfront investment. However, the long-term returns are often substantial, making it a solid choice for long-term investors who want to make a positive impact. The future of sustainable finance. The future of sustainable finance is incredibly promising. With more and more investors, companies, and governments embracing sustainability, we are witnessing a massive shift in the global financial landscape. Sustainable finance is no longer just a niche market, it's becoming a mainstream approach. One of the most exciting developments is the rise of green fintech, financial technology that supports sustainable investing. From robo-advisors that help you choose ESG-friendly investment portfolios to blockchain technology that tracks carbon credits, the intersection of technology and sustainable finance is revolutionizing the industry. Moreover, as global governments take stronger actions to address climate change, there will be increased regulation around ESG investing. Companies that fail to adopt sustainable practices may face penalties, while those that do could be rewarded with tax incentives or access to green capital markets. As we wrap up today, I want you to take away one key idea. Sustainable finance is not just about making money, it's about making the world a better place. Whether you're a beginner or an experienced investor, sustainable finance offers a unique opportunity to align your financial goals with your values. You have the power to make a difference, not only in your own financial future, but in the future of the planet. By integrating sustainable finance into your investment strategy, you're playing a key role in creating a more sustainable and just world. Thank you for joining me today. If you found this video helpful, please make sure to hit that subscribe button. Let's continue to grow this community of responsible investors, and together, let's make the world a better place, one investment at a time.